In Asia, the Ministry of Commerce has reported that China's wholesale and retail sector grew steadily in the first 9 months of 2025. The sector's added value rose 5.6% year-on-year to 10.5 trillion yuan, accounting for 10.3% of GDP and helping to bolster domestic demand. Profits in key wholesale markets rose 8.2%, driven by the 17.9% surge in industrial consumer goods. Retail sales increased 4.6% year-on-year to 32.5 trillion yuan. Customer traffic and turnover across 78 major pedestrian streets grew 4.3% and 4.4% respectively. Rural e-commerce also expanded, with online retail sales up 7.7% and agricultural products sales growing 9.6%. The Bank of Japan reported that the key gauge of service sector inflation rose for the second consecutive month in September, reinforcing its view that higher labor costs will help sustain inflation near the 2% target. The Services Producer Index rose 3% in September from a year earlier, accelerating from a 2.7% gain in August. Data also showed that prices rose for labor-intensive industries such as hotel and construction work, suggesting that labor shortages continue to push up the costs of hiring staff. The Indian government has reported that the economic growth outlook for the current fiscal year remains strong, supported by robust domestic demand, easing inflation, and recent consumption tax cuts. The report also showed that prices are expected to stay soft in the financial year ending March 31st, helped by a positive outlook for food production despite reduced acreage under oilseeds and cash crops and some weather-related crop losses. Still in the Asian continent, the Pakistan's central bank has kept its key interest rates unchanged at 11% for the fourth consecutive meeting, citing stable inflation, improving growth, and limited flood impacts on crops. Bank of Pakistan noted stronger crop yields, industrial recovery, and better high-frequency indicators, revising its fiscal year 2026 GDP growth forecast to an upper end of 3.25 to 4.25%. The bank, however, flagged risks from global commodity volatility, energy price adjustments, and food supply uncertainty. The current account deficit is projected to stay at 0 to 1% of GDP for the financial year 2026, with reserves seen rising at $15.5 billion by December 2025 and $17.8 billion by June 2026. Thailand's Commerce Ministry has reported that exports surged in September, posting their fastest growth in over 3 years and prompting the ministry to raise its 2025 export forecasts. Exports jumped 19% year-on-year, the strongest pace in 42 months, driven by a 35.3% surge in shipments to the United States. The ministry now expects full-year growth of 9.4%, at 10.4%, up from its earlier 2% to 3% forecast. Imports in September increased to 17.2%, exceeding the projected 10.6% rise, resulting in a trade surplus of $1.28 billion, well above expectations. Meanwhile, rice exports declined 15.6% year-on-year in September and 23.1% in the January to September period, totaling 5.8 million metric tons.